Hello everyone. Welcome to Search for Yields, a fortnightly newsletter from Ina Bonds. I am Nikhil. In today's newsletter, we'll be discussing about why these 3 to 5 year bonds are at the sweet spot, which are offering good yields, and as well as there is a scope for capital gains. Currently, in this the whole market, if you see this 2 months back, the whole yield curve is inverted because of the rate hikes which we're seeing globally and as well as in India, and the inflation was also out of control and it close to double digits. So, which caused the shorter end of the curve rates to start rising much faster than the longer end. So, the 2 year rates were higher than 5 year, and 5 year rates were higher than 10 year. So, the whole investing in a 2 year corporate bond or a GSEC was offering much higher rates than the 5 year and 10 year. So, from the previous monetary policy, that is RBI policy meeting, where that way paused interest rates and also said that they'll be waiting for the more data and as well as the global financial updates for the further rate hikes. So, which made the market participants to believe that the rate hike cycle is almost at close to the end, which caused the shorter end, that is a 2 year papers, to rally. That means the yields have fell significantly. For example, uh, the Tata Capital Financial Services 2025 bond was offering close to 820, 825 before the RBI policy meeting, and post policy meeting, there was a good rally, and currently the bonds are traded at 790 levels. Yes, same with the HDFC Bank and same with the government securities as well. And the government securities, if you see, the 5 year GSEC rallied from 740 to close to 695 levels. So, given that there's a total the market environment of expecting the interest rates to go start to slowly come down, and as well as the globally, the Fed also said that the current rate of 5 to 5.25% is good enough to bring back the inflation to 2%. They're also expecting the Fed to pause rates for a while, can cause some good rally into the bonds which are medium term bonds. So the current headwinds for the short-term bonds is the liquidity conditions, and as well as the inflation. The expectations of inflation is still higher, and as well as the Indian monsoons are expected to be lower this year, which can cause the rally in the food inflation. So these headwinds are causing the short-term rates to stay higher up to 1 year. The like if you see the CPs and CDs are offering close to 7.5%, and the corporate bond CPs like Piramal Capital Housing or the Piramal Enterprises or Shriram Finance, they're offering close to anywhere between 8.3% to 8.6%, whereas Navi FinServ is offering 9.1% for a 3 month to 6 month CP commercial paper deposits. And if you go up to 1 year, you have the liquid funds, whereas they're offering close to 7.2%, and near one up to 1 year corporate bond, that is AA minus to AA, are offering 8.5, 8.6%. And if you go to AAA and 1 year up to 1 year, they're offering 7.8%, the AAA PSUs. And if you go to perpetuals, example, SBI Perpetual, March 2024, that is offering close to 8% levels. So the bonds in the space of maturing in 3 to 5 year space, where we have, let's say, ARCA FinCap 2025 or 2028, they're offering close to anywhere between 9.6% to 10.1%. And a few AA plus papers like Muthoot Finance, and these all are offering 8.5%. Cholamandalam. The new issuance was the new IPO was showing a level of 8.4%. All these papers are from AA minus to the AA plus, or are ranging from 8.5% to 9.5% range, whereas AAA's they're offered at 7.7% to 8% range. The Bajaj Finance or HDFC were offered at 7.7 to 7.75 levels, and whereas M&M Finance and Tata Capital, uh, uh, they're offered at 7.9 to 8% range. And 2026, 2027, SBI perpetuals are offered at 8 levels, and Bank of Baroda perpetual also offered at 8 levels. Beyond 5-year range, where the G-Secs, the 5-year G-Sec is at 6.95% and 10-year at close to 7.05%, and 10-year HDFC is offered at 7.8%. And 2025, forgot to mention the Bharat Bond ETF, where it is offering 7.35%. So these are the kind of the levels that been ranged for the corporate bonds and as well as G-Sec for the near term and medium term and the long term. The investor who is looking to invest in the medium term, like that is of 3 to 5 year, they can park into the bonds which are perfectly fit for your risk appetite. Consult your financial advisor to choose the right bond, and that these bonds could give a rally given that when the interest rate starts to cool down and starts to fall. So the rally in these bonds can also offer you the capital gains plus the YTN. We have also covered the previous podcast that how can you trade in the bonds with the 10% long-term capital gains. The link is given in the description below, where you can look at the capital gains, how much the taxation you have to pay, and how the strategy works. Thank you for listening in. If you are a financial advisor, if you want to give the best bonds of 3 to 5 years to your clients at the best rates, do check out our partner portal, where you can place bids and offer on behalf of your clients, and as well as you can respond to the primary offers on behalf of your client. And if you are a fixed income investor, check out our QuickInvest app by INR Bonds, which is available on both App Store and Play Store. These are our curated list of bonds, and they keep on changing as per the market dynamics. And you can get the best rates available in the market, and you can experience the smoothness of smooth process of investing in fixed income products. Thank you for listening in. Do subscribe to our YouTube channel if you're not done so already.